What was the headline error here in this IPO process? Was it simply management structures or much deeper than that?
I think it was deeper than that. I think it was a mix of management structures and governance was clearly failing, but also too much leeway given to a visionary, but let him go past that point, which I think made the company very unfocused. Potential bad behavior and criminal activity, but that's obviously not, we're all still finding out where all the pieces lie. But I think as the company grew, there became an echo chamber that really enabled no sort of proper structure, governance, and controls to be adhered to, which enabled them to get to where they are now.
Which sort of raises a question, David, about whether the bar is high enough for private investors. I mean, is there a big gap between what private investors are willing to put their money on and what public investors are?
So typically in a situation like this, the last round before an IPO process is in some ways a consensus that includes investors that are spending a lot of time in the public markets, Fidelity's, Wellington, T. Rowe, et cetera. Many of those firms actually invested in earlier rounds of WeWork, liking the growth story and the potential, but were not part of the shift from a $20 billion company to $47 billion, which was really driven by SoftBank. And so it meant that there wasn't a consensus on that valuation, and a bit of a challenge now of trying to figure out where the public market ought to value it.
Jonathan, the same bankers are involved in the private round as trying to get the public round off. Where do they stand in terms of the level of blame due for letting this go so far down a sort of disappointing path?
Well, you would think the bankers are the experts, and they're the ones who are supposed to be leading this process. On the most basic level, where were they is a great question. How they let an S-1 get out with these clearly massive issues that investors were going to take that were significant and still let the process run forward. You wonder where their own, just on the process side, it seems to be a big failure, because this shouldn't have come out at the time of the S-1. This should have come out well before. If you even think of Uber, where they had their issues, they spent 2 years cleaning up. They brought in a new CEO, they took action, and after that point spent 2 years making sure the public markets were very clear where all the issues were, spotlighting the corners, and doing this in real time in 7 days is clearly a recipe for disaster. And you think the two most experienced banks in the business would have had a chance to foresee that.
David, does this experience ripple out through other private companies, other startups? Because there's been this tendency to see these deals as a one by one. I mean, if the business model of WeWork really had a lot of confidence among public investors and the governance was fine, you know, or vice versa, if one or the other worked,
sure,
it might be a different story. So is there a chilling effect, or is it a one-off?
I don't think we've seen that. I mean, Datadog went out last week, incredibly successful IPO, oversubscribed, huge pop. I think we're seeing, you know, a wide dispersion in the outcomes of the IPOs from the past month. And so, I mean, hard to predict for investors before what's going to happen, but there definitely is a number of very positive stories in addition to some that are, you know, perhaps scarier.
Does it change the perception of SoftBank, which is trying to raise its second vision fund?
I think that's to be determined, and it's, you know, in the same way that this is a story of one very key stakeholder and what they're going to do. I think that one, there are specific LPs that are really important to the composition of SoftBank, and so I think it's a handful of people, not a broad market consensus as to what SoftBank Vision Fund 2 looks like.